does. Hey, everybody. And by everybody, I mean the only hardcore member we have of PPT. I'm not going to say this Zoom user's name, but he's here. All right, guys, it's April 3rd, 2026. This is live. I don't expect a lot of people to come today because, well, it's a holiday. And not many people know about me for good reason, maybe. All right, so let's look at the screen here, right? So there's not a lot to talk about today, but there was, I'll just go through, when it came up to here, I mean, I was getting ready to short again. So how did you know that? Didn't you think it was going to go up? Well, I mean, if you look at the market in terms of multiple time frames, you'll never get psyched out by the fourth time frame, which is the intraday bias, or even the short term, which is the last couple of days. Now, these are the way that I look at time frames. You can go on and not Wikipedia, Investopedia, and look up multiple time frame analysis. They won't define it like I do. That's because there's infinite time frames. So you have to find what I would suggest is find multiple time frames that work for you. I'm going to give you my secrets and you'll see why they work today. So you don't have to figure this out for yourself. You take that multiple time frame category, which I've marked on your daily call sheet under larger time frame bias. Okay? Because you might say, well, that's what I don't really care about. I'm looking at the short, the intermediate, and the big picture so I can figure out what the institutions are doing. So larger time frame bias is the synthesis of those three. Don't get confused and think it's the big picture bias. That's one category of a subdivision of the larger time frame bias. It's a little confusing, I understand, but it'll make sense. So yes, we had, and even the long week, the system called as well. It just psychologically might have been harder for you to shift, but when you have a pause day near a support zone, near the bottom of the balance, right? We can't really fall more. Like after this pause day, you could start to go long on sideways to up entries where you're not like thinking a breakout, but you're going to go fade support, right? And you would have made a good amount of money. Now, up here, don't think, okay, now that it's been up for the last 2-3 days, I have to keep going up. I'm only going to go long again. That doesn't make any sense. And you might say, well, didn't it just go all the way up over here and all the way up over there? I'm like, yes, you can look at some of that, right? It is rotating off a zone, but we have to look at the context. It's always going to be rotating off a zone in a different way, approaching different market structure every time, right? This time, when we went up there wasn't anything that was going to stop it. This time going up, there's all of this sideways action, which has a high volume node on that time frame, and then a strong breakdown move. You don't think on first test, when there's below average volume, that there's going to be sellers there, meaning traders that are willing hitting they have larger stops than us, and they're just selling at break even right now. And because the larger time frame bias, right, has been sort of neutral lately, these smaller time frames then can affect you. Whereas when the larger time frame bias made its decision during, after we broke down here, it didn't matter how you were always going short in this phase of the market. Now, due to the magnitude of move, see, time frame bias isn't just time, it's also magnitude of move. That's where I add my own thing to it. I give you like 1 to 4 days just as an average, but when you have a huge move, like in one day here, we broke well more, like almost more than a month. I don't want to count it, but it looks like it. Okay. It's a long time. In one day, you can't just say, well, Matt said it's 4 days, 1 to 4. No, all of a sudden, I don't care that the last 2 weeks went sideways. If you look up the short, the intermediate, and the big picture, due to the magnitude of move, this has now shifted the short, the intermediate down. And we'll get a confirmation of the big picture being down once we break that. It's definitely neutral bear. I mean, because of the magnitude of move. And you might say, well, there's a buying tail. No. Are we at the bottom of a sideways downtrend, shifting a phase? Hopefully what we'll be doing in a few months now? Or are we at the end of a very happy bull run? Like you got to do your leg count and look at the context. It's always got to be about the market context. If you take anything too simplistically and put it in a vacuum, it doesn't work. I'll give you an example. Sometimes I do research on my competitors that have huge followings. I'm thinking maybe they just had a huge budget to begin with. but usually it's like a pretty face. This time it was a woman, and they say a very simple strategy, and their catch is, well, most people don't have the patience to do it. I don't care even if you programmed it. What they're doing is way too simplistic. First of all, it's not top down. Like they basically said, one of their setups is they take a box around the previous day's high and low, and then no matter what, when it gets back into the low of that, they buy, and if it gets into the top quadrant of it, they sell. Are you kidding me? That's it? No, absolutely not. That's ridiculous. Imagine if we would get a bounce breakout when she's fading a constant uptrend because she doesn't understand bigger picture patterns. Why would you even care about a resistance at that point in terms of a short? So anyway, back to the multiple time frame analysis. I mean, that's why I can't really sell what I do, because like I'm only talking about one category of what I do. This might intimidate people, this whole multiple time frame analysis. Like, oh my God, it's a weight. All right. So at this point in time, how would you trade it? It's not that you wouldn't on your candlestick pattern notice a buying tail. It's just that you would now on your, which would affect your candlestick pattern to sideways, right? See, tight doji. I imagined that even before seeing it. I've seen that pattern so many times. You got to think about who's in control. But because of the time frame alignment to the downside of the short and the intermediate, because of the magnitude of the move, the larger time frame bias is now bearish, meaning you have to mark it down or even sideways down. That's a little bit of a nuance. It's not. That's framing it in a way that would help you, but it's a harder way for me to think about it. But the point is that I want to go short. Okay. See what I mean? And I saw that pattern, but because I was so happy, I couldn't snap out of it to take action. I'm not even kidding. That's how hard this is. Like I have to forgive myself on how much maybe I get impatient with people that do the same mistakes over and over again. I get very frustrated. But then I'm like, wow, I've dedicated my life. Maybe I think what I'm saying is so simple to people, but maybe it's really difficult and I got to slow down, because I think sometimes I think maybe this is too boring, but I got to take it back. I know that's not the case, but so every time you had a short setup, then that would increase your probability of it being in your favor. You'd want to do that. So it's in alignment. Then you'd have these hook from extremes, which then you'd measure the momentum. And it's like, look what you would have caught or saved in your portfolio. Okay. So, I mean, at the time, I also had someone that was helping me execute, because I was nervous to do this on a ledger. And unfortunately, that person who's is my statistician, through his negative psychology about what he always does, he hates to sell at the highs. I've already maybe talked about this, but it's such a painful thing for me. This man held me back. If I don't calm myself down, I will virtually strangle the shit out of him. But now I know how to do it myself, so I don't need him to execute. It's all good. Ooh, forgive, Matt. Forgive. Okay. So anyway, by the time I got control, we were getting out around here. Then we went long. Now that I had access to this in private, I could do big swings, getting long here. But then the beautiful exit, I totally redeemed myself getting out here, 100% following my system and execution of my own volition. Here, I saw this in my system, was in euphoria, was talking about it with my executioner, and every single time he was talking me out of it. And I didn't think it was going to affect me because I'm a professional, but why did I wait till it broke down before I did anything? Seriously, guys, like be careful who you tell you're a trader to. If you're thinking about becoming a professional trader, unless you're in a contract with your wife, don't tell anybody you're going to do this. Everybody is going to disrespect you and hold you down. Absolutely nobody knows what I'm doing. The reason I interviewed in all these wealth management firms, I don't know, a decade ago, is so I could get that Series 7 and 66 stock license. But then you interview with these people and it's so rudimentary, corporatized, and fucking boring and evil that they do. They only remanage portfolios, some of them 4 times a year on 4 specific dates. That's it. They just want, their whole goal is to keep your money in. Other ones probably do different things, but not as quickly as we do. So I'm glad I got out of that stuff. Yeah, okay. This is way more pure because everything I'm saying here is based on the facts in the chart. We're in a trickier spot now because we've had multiple leg counts down. But the question is now, is this bounce going to resolve with an uptrend or is it going to resolve with the downtrend? And the odds are saying it's going to resolve with a downtrend. I can say that with confidence because I didn't say it's going to. I said the odds are saying that, and that's the best we can do. That's how it's behaved. in the past around this time. I mean, from a dollar cost average perspective, you're half off. So I get why people would want to, but that's a little impatient when us traders know we're still in a potentially bear market here. We're not in a, an up market. We've been in a down market since here. One leg down, two leg down. I mean, if you want to think about it that, you can think about this is the first leg. Second, I'll even give you that one, but this is the first breakdown leg. And these are really long balances that are mature. The longer the balance, the greater the trend. So these are strong convictions, right? Another long balance, very similar in length to this one now. And I have to zoom out now to actually explain to you why I think we're still in a bear market. Okay. First of all, let's actually look at the index so we can get the entirety of Bitcoin, this entire chart. Okay, now we got it. I don't need to go that far back, but you get the picture. We're doing a lot of data here. I have these marked. So first of all, we got to talk about what moving averages are, right? Moving averages, like nearly all indicators besides the market internals, are just derivatives of price for the most part, especially moving averages. They're derivatives of price. They're going to help us see trends and downtrends. That's it. When they start to flatten out, you're already in a sideways market, and they really don't become that important other than confirming that you're in a sideways market. They become more important while you're trending because on your daily call sheet, you can use it for your moving averages category, which is basically, are we in an uptrend? Can we use it as support or resistance to help compound confluence in an entry? A lot of times in the channel, you'll hear me talk about confluence. Confluence is just a stacking of edges that are in my favor. The way that the system is frameworked is the same way consistently professional poker players play the odds. They're simply playing the odds. A really good poker player will always go all in on pocket queens. You know what I mean? They know the odds, even if they're wrong mathematically. 4 out of 10 times over 100 sample sizes, right? They're going to make money 60%. And that's how they have to think. With trading, we actually can play a lot more poker games than they ever could in Texas Hold'em. That's the problem because you can see something all the time. Not every pattern's a setup. But here's the pattern that we are in my opinion. Because we've had such a healthy bull market, we can count the leg counts with 2 confirmed double tops and 2 confirmed double tops. Not only was this acting as support, but this 200 moving average was a very special line in the sand because from a beauty principle perspective, when we measure the distance between the price lows here and here, they're very similar to here and here. So it was acting as support, even though you might say, well, it didn't touch it. Like, let's not be so literal. You know what I mean? Just look how it behaves. These are also falling wedges, which are basically sideways channels that are giving more odds that when it resolves itself, because all balances will resolve itself in a trend and vice versa, that the odds will be more to the upside. Because it's a falling wedge in the context of a recent golden cross. So I'm using these pullbacks as entry points, right? That's the idea. The bull run was in place until we broke this channel of the 200 moving average. Okay, so that's a confirmed. The bull run ended here, and I remember I said this in the channel when we had that sharp candlestick. I said, "All right, bear market's here," and people instantly started to. I'm not even kidding. Same people. I'm not going to call them out, but they're like, "Nah, but I think it's this." And then people were actually posting their ideas of bull. Like, guys, what are you doing? I'll shut the two-way thing down. You were all flat out wrong. Okay, so let's just call it that. And you were wrong because you were emotional. You wanted it to keep going up because you're in altcoins and you need it to happen. Guys, the market doesn't care what you need to happen. The reason why I'm still trading and not retired from the last bull run is because I switched to mutated strategies from what I'm teaching you today due to euphoria and thought the same thing you did. that this was a new thing and it's got to happen. The market doesn't care. We already know that. You're all 99% losing. I'm not, hey, because they're always designed to take your money. That's just the nature of this. And cryptocurrencies are the most difficult markets to trade in the world because they have the most amateurs that are being taken advantage of. I mean, I'm in a lawsuit over a cryptocurrency investment probably at this point. What I'm teaching you is the solution to it. It's a honest archetypal system based on a stacking of edges of probabilities like the world's greatest poker players do to be consistently profitable in their domain. It's mathematics applied over a large sample size. It understands the law of large numbers. So short term, you could have a winning strategy and just be unlucky and lose 10 times in a row. Like flip a coin right now. 50% odds. You think you might get 5 and 5? Well, what if you actually get 10 heads in a row? That could happen. And then you're out if you over position size. But if you keep your position size at less than 2%, you can still recover because if you can get to 100 trades, you're not going to have 100 losers in a row. It'll be then to find the law of large numbers will go towards the central tendency of 50-50, and that's what you want. If you actually right now, you could be a professional trader right now if you had a 50% accuracy and a reward to risk ratio of 2 to 1. That would be really, really good. Most people can't even achieve that. It's very difficult. 2 to 1 is hard in Bitcoin. It's very volatile. Because the tendency is you'll take your quad exit too soon, but then you'll let your loser run a little bit more than you should. Now, a solution to that would be you really have to set it and forget it and use your risk ratio as a criteria for your trade location entries. Because if it makes sense to wait for something and be more patient because due to the time of the day and the fact that you might take a necessarily wide stop, it might not be worth it for you. But just getting back on track of why I wanted to show you this. See, once we broke that 200 moving average, the bull market was confirmed over. You should have saw this and be like, wow, we're done. Like we just broke a giant balance. And you should be imagining a shoulder and a head before this, shoulder, which is a little crooked, got into place because there's a downtrend line here. Once you break this, it's over. And now that we broke this, that's another leg down, and it's now making another bounce, getting ready to form what I think is look like another rising wedge, which is a bearish pattern. The other thing that happened is that these two move averages crossed. Like I said, that's a 200 and that's a 50. When those two patterns cross, it already confirms the price action structure I just showed you with the breaking of it and shifting time frames and whatnot. And that's called a death cross pattern. And that implies more downside conviction when it happens and another sideways phase before we get an up phase, time factor. Let's go back and see what happened in the past when there was another death cross. Very similar. There was this, violent candlestick that then confirmed this breakdown. It took out all this data. There was a buying tail, but it was 50-50. See, then there was that tight day. Then we broke it again and went sideways. Everybody thinks we might recover a bounce breakout, but we know, the bull run's over. Now you're in a sideways phase. Just from that, what happens in terms of cycles, right? If you're in a long up phase, then you go into a long sideways phase. Then you go into a down phase. Then you go into a sideways phase. And then you go into an up phase. And then you tattoo him and then you kill him. No, I'm kidding. All right. So what happened, right? So then we broke through, right? And that same cross just happened again. And we're in a sideways phase. Let's see if that's a similar amount of time and distance to where we are right now. Yes, very similar in time and distance. All right. So if we go to similar in time and distance, what happened? Did we then go up? This is all we can base it on is patterns. No, we went down again because, we're in that down market and it needs another leg down to really mature. And did it just go straight up? No, it went sideways, but I would be totally okay giving a reload signal for the portfolio there. Prepared to know that I'm going to be holding it for a while, but my price is amazing. Tempted possibly to swing trade it because it'll be in a sideways phase. You'll probably see hook from extremes and some candlestick patterns that are bearish. And you'll be aware that the next phase would be sideways because you need a mature balance to have an uptrend. It's not just, you know what I mean? Like this whole V recovery thing, guys. I think COVID made people think V recoveries happen a lot. They really don't. Here's a V recovery. This is the opposite. The V recovery pattern is the opposite pattern of this, what I just did when I was up, sideways. Like that's, this is the anomaly, but that was COVID. We don't really have that. We're used to all the weird stuff they're doing now. The constant wars, the constant prices, the weird ticks that they're releasing in boxes everywhere. You know, people are just like, whatever. This was something really weird. So that's why we got the V recovery. But we're not in that pattern. We're in this pattern here. So once that happened, we were in that phase, we needed another down phase, and then we went sideways. And then you see how the 200 and then the 50 needed time to mature and separate from each other. Expansion and contraction principle, things come together and then they go back. And then they expand from each other. And then you're already saying, okay, this is the rounded bottom. I don't need to wait for the golden cross confirmation. The golden cross confirmation is going to make all your shorter term trades more bullish. So you go long and long and long. But I'm not saying reload your portfolio for the golden cross because you're actually going to be buying at a much higher price. The only thing you would benefit is like emotional capital because it would be more of an uptrend rather than if I told you to buy maybe on this first down leg, which would be a great price. And then you hold and then you get one little micro one, but you're in the long run, this is an amazing entry. I'm what I'm saying is I've been very, very patient with everyone, but for myself, which is difficult for everybody and myself. But once we get a violent another downtrend leg, if we get that, I'm going to be less patient and just be more on, okay, do we get a really great price? And then be a man and just hold through it sideways. I don't really want to finesse too much down below. I really don't at this point because it's been very psychologically hard to be patient and not do things bullishly or whatever, you know. So that's the idea. If we can get something right into the 50s, the 49, like a one violent two leg down, like it happens. These moves happen really quick. This is a 3-day chart, by the way. So that's kind of where we are. We're at this indecision candle. Now let's just go on a little bit higher time frame now. Let's get out of the daily and let's go to the weekly. We'll do this on multiple time frames. You see, but also I didn't actually mention this, but I was seeing this because there's just so much shit. You could add, I have this one under RSI, but it's part of the weekly. You see how it hasn't confirmed the blue over the orange, but it's starting to pinch and cross. You see how it started to pinch and cross and started to pinch and cross on these false breakouts. That's what it's doing here, in my opinion. And we got this previously, like a couple of weeks ago, very crazy inverse zero line reject, and now it's still red here. But you'd like it to see it already confirmed, but that'll be after. If it goes red, then that usually lags quite a bit. We also have this custom PPT. We got this cycle node back tested. You see how it actually predicts inflection points. And this is May 11th, right? That's a time that it might actually have the bottom in. Like I said, this takes a long time to mature, but the downtrend can be very quickly, right? And the other thing I wanted to say on this weekly too is that messing around with different moving averages, and what we could do is we could actually even go to index. And once again, this is just a different purview of moving averages. This is two other classic ones. It's a 15 to 21. Whether you're the 200 and the 50 or the 50 or 21 or whatever one you want to use, the whole idea is that once the slow one crosses the fast one, it's death. Because think about it. If the slow one is crossing the fast one, then the tortoise is actually sprinting faster than the hare, and you have a sick hare. So that's one way to think about it. And you can see here, death cross. And also, I've marked this down as the first leg off of the death cross. And I've marked this one as the first leg after the death cross. Let's just imagine this amount of time and separation. and a very similar amount of time and separation, which means like smash. But this third one wasn't that much of a difference if we got it around here. So, like I said, I'm just prepared to give. If we can get a really violent leg down, I might go in, even though I know statistically there could be, just how it's behaved. It will take a little bit longer to mature. Even this one took a little bit longer to mature. Um, and this one is also starting to pinch as well, which is bearish because you don't really want the other one, the red one catching up to the blue because then it'll cross and then it goes down. Also showing an inverse zero line reject. Also beauty principle pass with death cross. Let's go and just take a look at another death cross. A little bit different behavior this time because it was already going down on the death cross, but then the death cross happened. And you could just see just a really strong downtrend move. 7,000 down to 2008. I mean, those are life-changing gains. I mean, people talk about selling at the right time, but waiting in through the bear market and then knowing the timing it right with the cycles is also just as important. And that's what we are aiming to do. You see how when this started to bottom, it started to actually go towards support. We're not even at that support level. See what I mean? So I don't. The patience to do this is based on what I'm showing you, and then we'll go up another time frame here. What else do I want to show? Yeah, let's take a look at this one now. Right. So sometimes we might need even an indicator to help explain what I'm saying because this is very emotionally difficult because we don't know the future. And what I'm doing is the counterintuitive thing rather than just aping into every like a DCA guy just says ape, ape, ape. But it's like that's the opposite. You're just going to blow all your capital if you do that and you're wrong. So we don't really want to do that. You can see this red is the trend. I mean, look at this. We just started this red. And it's the first break of it, the Gaussian channel sideways. And broke the red. This one, even got a little bit lower, but not as much. But still, like it's when it breaks the red, there's this bear that takes a while. And this is a significant amount of time from like June 13th of 2022 to February 27th of 23. And I cloned the box just to get an idea. And that would take us to like January of next year. So it's just be prepared. Like this thing could be a sideways for a while, but you'll be getting in at really great prices. Uh, if it mirrors it exactly, it doesn't always have to, but you can just see on the weekly that past history, there's some time, especially like the bigger you notice that the bigger the run visually, the longer the red, the longer the green, the longer the red. This was a really long green. We had barely any red, barely. It's kind of weird. And then these really crazy price rejections. Anytime the bulls try to make a rally, aka false rally, aka confirming downtrend, increasing odds that this sideways bounce won't resolve itself with an uptrend, but will do it to a downtrend. Um, it just takes forever. We're in April and it still hasn't resolved itself. I need to go on the daily now. So I did the daily, then we didn't do the daily yet. We did the 3 day, and then the weekly, and then we looked at the weekly on the Gaussian. We could go bi-weekly and monthly. We might do that in a sec, but I just want the daily sometimes gives me I can look at it, but also just see a little bit more price action. Let's get rid of this. Shoot. Shoot. And it went doji down. Yeah, this went doji down. So what I have here is a little bit of just repetitive patterns. We have a very similar kind of ugly looking rising wedge. This one's longer, but whatever you can see, just multiple trying to make highs but not doing it. And then this 50 kind of going around it and then kind of like weak and then making these dojis into it after we sort of had this ugly looking tail, this ugly looking tail, this head, just not really looking super, just getting rejected. The bulls demoralized. Now we're underneath it again. We were underneath it again. The couple days ago, where I was telling people to short, we had an insane. I mean, this was so insane. I was early. I was so confident because I saw this. I didn't even wait for the doji to confirm it because I got in on a time when I didn't have to stay up into the next day. Because if you wait for the doji, usually the double top happens into the early morning my time. So it's like, do you really want to do that? Just, when you see this exaggeration, I mean, last time we had one up here, that's a good one, but it's nowhere near even as strong as this one. This one's crazy, guys. Very crazy. So that's what gave me whatever. And then coming back in and then seeing a little bit of this, it was like, yeah, it's there's no real edge right now. I Either way, it would have been possibly correct process for me to just capture my profits because I don't have a good feeling whether we're just going to bounce around here one way or the other. Now I'm keeping half on right here because I do have good trade location up here relative to this, and I can't lose since I took off. I think into somewhere I got to go back. It was into this day. Now I could capture a lot right here, guarantee him like a lot more winner if I take off another 20. If I take off 25, but I do have risk-free money to see if we can, get another move down, kind of like that. And then at that point, I'm holding that. I'm really going to hold that 50%. I mean, look at this. Look if I could just calmly hold a move. It could even get an idea. It doesn't have to be exactly like this, but just an idea of what we could get in another. So if the next one is abnormally violent, like if it mirrors something like this, that's actually going to be kind of bullish because if the largest leg is on the last leg down, even if this one's bigger, then it's a sign of exhaustion. Just go back and look at leg count. You'll be shocked at how it looks like it's the strongest at the end of it, and then it gets smashed down. Wow. Yeah, if I did that, I would be very, very wealthy. That would be really great. If I could just hold off and smash into that, that would be nice. And I hope other people will be too, because this is going to be a buying opportunity of a lifetime. Let's just see how well this clones out. Oh my God. I mean, really nice. Look at how it repeats. It's unbelievable. Now that's one leg down. See how I was counting that as a leg? I like doing that, even though it's still within the balance. One leg down, two leg down, three. Yeah, the fourth leg down. As we're getting into fourth, five, I'm not saying we're going to get to six, but like that's when you start thinking, okay, the downtrend's over. It's going to be sideways for a while at least. Now I can start going along a little bit. But you don't thinking, oh my God, uptrend. That would be a V recovery, and it's not COVID. So we're not going to bet on the low odds thing. But yeah, this would be wild. I mean, 50 to 40 right now. You don't, I mean, that would be crazy. I mean, if you saw a doji here and you saw a move like that, it would be hard not to take a position on your portfolio at that point a little bit because it's still like, wow, I got it below 50% off. I mean, that's pretty good. And I'm in this leg count. We know it's starting to cycle out and so on and so forth. I don't like the death's cross on this time frame because if you go back and you look at all these false signals, like look this flip, this went over that. Um, you don't want to, like for example, when it went up here, it's a false signal, didn't work out. The time frames and the moving averages that I chose haven't had any false signals yet. This one, that's why I don't use the daily for this um, higher time frame category, which I haven't really added to the daily call because I'm using it as a portfolio thing as well. But I mean, I'm not adding death cross. You could call it a bigger picture pattern, I guess, but it might not always help you on a day trading time frame because just because there was a death cross, that doesn't mean there wasn't some great long opportunities in this last month. I mean, we've had huge swings up. I mean, if you really could trade both of that, understanding the phase that it's counterintuitive and doing that, um, you could really crush it on a sideways market. For me personally, it was very easy for me to go short on a lot of these trades, even though I knew like, hey, we're sideways, we can go long. It's just psychologically right now because I've been short a majority of my trades since no, yeah, right here, Friday, January 16th, confirmed, right? I was like, so I've been, short the entire way down here, short, short, short. But when you're in a sideways phase, you have to think. So, I mean, since the market's a fractal nature, you could even take that principle of what you're fading for into an edge if you have the strength, the emotional capital, the fortitude. So, for example, well, I think I held it for a while. I forget when it was. Here maybe. No, this is the wrong chart. That's why it looks weird to me. Is it the wrong chart? Yeah, this one. This is a better. Yeah, yeah. Okay, this one visually shorted here. A little bit wider stop than I wanted because I was really confident. Even though psychologically I was like, Matt, just get out and then fade this zone with a stop above there. But I was like, oh, basically instead of holding for 2R, just take a little 1R and then 1R. But I just didn't want to do it because I didn't want to lose. That's why, flat out. I'll tell you that right now. But it's not like I held this 10%, so it wasn't like incorrect. It was just, day trading. You could have better edges. I'd much rather be up here than here, but whatever. Then this was a great half off point, I gotta say. So that's what I did do well, is that because I knew that this was a zone fade for a reversal, not a zone fade for a tradable reaction, I had a longer half off target. So right now it's sideways, so I haven't taken 25 off yet, although, part of me wanted to hear. There was, at this point in time, at 9:45, my system said, since I'm fading key reference zones on sideways days, that I should have took maybe 25 off, or at least kept half on. Or if I didn't take 25 off, then I should have went long because I had half off on my capital. Knowing that while this was a zone fade for a tradable, I'm sorry, a zone fade for a reversal, this one, with a possible swing bigger leg down, this one would be like a day trade only because it's a zone fade, not for a reversal, but for a tradable reaction because it's short term exhausted and it has a good odds to go to the VWAP, which you did. I saw that. System said it. We were talking about it, but I just didn't press the button because stress. It's just stressful to always, because like I'm a winner now. I can just like, I don't care. Sometimes if you're in a trade and you're a winner and you see another setup right when you're about to quit, you're like, man, I would give it all back. I always say that, but that's not part of the system. The system says, does this idea have a positive expectancy? Then you do your probability calculation scale. If it does, you go in. But we're not machines. But as I'm getting better than this, part of me is just like, could have went all out. This is the other thought I had before I just walked away. I said, then I go all in, and then I start to get into the VWAP again. Then, but then you have bad trade location and you're getting too caught up in reading it too well. And actually, if I did do that, then I would be in a problem here, wouldn't I? You know what I mean? So what I wanted to work on was thinking about, yeah, this would have made sense. It's not like I was planning on reloading my half off short. So I could have just went from here to here, all in, all out. I mean, add that up. If you go all in, all out on that without the quad exit ahead of time, like you're gonna make like, we can do the math on it right now if anyone has a calculator. But that's from 65,826 up to 66. You made over 1% in a quick amount of time. Ahead of time, you're not thinking, oh my God, now I'm going to hold this. It's going to possibly reverse today. I'm only going to take half off. No, because you've already predefined it as a zone fade for a tradable reaction, because that's logical. Because what did this have at this moment in time? At this moment in time, especially when it hit 9:30, we already know that special moment in time at 9:30 Eastern Standard Time, my time, that first hour has a unique edge that you can add to your system because 70% of the time, the higher the low of the regular trading hours after that is made in that first hour. So you might say to yourself, well, I know this has like been a downtrend day and the intraday bias is down and so on. Like if you bought here, you're going against a lot of sustained momentum. Here, you might say, "Oh my God, okay, it's went very far, very fast into my zone, a strong zone where we had buyers here, right?" And you could even go back in time and see exactly why. I'll see that key swing and a key. This was not a weak zone by any means. So, you could have went long there and then went all out there, around there. You know what I mean? Or take 75 off and see if you can get a little bit higher and then go all out. You wouldn't be holding it up to here at all because I wouldn't even. I didn't think it would ever get to the high of the day because the intraday bias was so bearish. Like when you wake up and before you start to trade in the morning and it's already in the overnight session down 3%, I don't even really. I mean, just think about it. Very rarely are you going to recover that if you're down. It moves that much in the overnight session. So that was the case. You were already down quite a bit. So yeah, that's why I've defined on the channel zone fade for tradable reaction and zone fade for a reversal, because the idea is to use the daily call to fade the key reference areas on the sideways days. And on days when you have good odds for direction trending, then you want to get on board the trend. Ideally, you can get on board trend with a fade setup if you're fading good support and resistance. But if you want to use a pullback continuation setup on those days, that's the day to use them. And they have really high odds of working out. They're very easy to execute. They resolve themselves. Like they're very easy to execute from a time perspective because it's going to resolve itself one way or the other, usually in your favor because they're 3 quality out of 4 qualities trades in your favor quickly, rather than like the trade that I was in sideways. It before my finance target was hit for half off, stop to break even. It took 25 hours, which I went in a manic phase and didn't sleep for 2 days. So just be careful on these sideways setup. It's like watching paint dry. But that's just my nature, not because I was nervous about it. I just, if you can't shut your brain off because you're constantly seeing patterns, you just might not be able to sleep. So, but what I don't do is I don't just sit there and trade constantly because I don't want to be looking at lights the entire time either on a screen. So, like I said, we're kind of been forming a balance. We are um, oscillating around a high volume node. The reason why I think a trend could start from here is because this is mature enough. And one of the secrets about why this indicator draws a red line is that and like often when you're in a mature balance, when it starts to even get volatility contraction, which we don't have, but we do have a mature balance, the trend will often start from that red line. So that's another reason that's giving me some reward to risk to keep my 50% off rather than just go all out, just call it a day and capture that nice short. Because if I'm right, I could take risk-free idea right now to get a giant move off there. And I think my next target might be somewhere here, and then another one here. So it's like just basically at these next zones, nothing crazy, but that's a lot more profit if I can hold through that. See, I'm not even this is close. I took off half close enough to this zone where I'm already satisfied with that because I feel like it could go down more. So that's how I use these high volume nodes. You see how it's not really super actionable right now. You wouldn't say, "Oh, I'm at a high." This time maybe on first test because it moved far enough away. But the idea is that as it's developing, it's not really actionable. Super reliant support resistance. It can act like that, but it flips roll. Like it worked here, but then it didn't work there. But then when we came back down, it acted as support again. But so I'm aware of it. If it's happening in confluence with like some top building like here, that's great. But I'm not like, oh my God, that's something I'd really trust. In fact, I don't really even give it a lot of weight until we would like, let's say we did get my thesis right and we broke down for the next like 4 weeks. And then we went sideways for like 5 months. And then when we went up again and touched it, then it could be a really good short when you really like break away from it. But as you can see now, it either works or it's just not really super reliable. But you can see how it's kind of flipping rolls here. And usually, like let's just see for the sake of it, if the trend started on the previous one with this thing indicator. Yeah, you see how it did? So that's another reason why I'm holding it because we were kind of like at an area right now, similar, in my opinion. See how it's just like right at the end of it, and it's been like it's quite long, and this is kind of like and it's at the end of it, and it's quite long. I mean, man, I will hold that runner Corby style, you know what I mean, down to here, and then just trade on half my account. But if you are really, really in the flow, you can get in and out quicker by fading those key reference zones. If you want to go all in, all out on a zone fade for, so if you ever take that setup in the channel called ZFTR, zone fade for tradable reaction. I mean, you could maybe if you get a really great bounce, you could take a quad exit, but it isn't all out, all in because you're on the wrong side of the market that day, odds wise. You're just like, hey, this thing. I mean, that's why I almost went long because I was like, man, it's gone down so far, so fast, which I've defined in that setup. 60% of the day is already done. It's like, what the heck? This thing's got to have some short term covering. All right, I'll go long. Boom. Nice zone, especially because it was at a really good zone. And I don't think we've broken the zone yet. You know what I mean? So that was actually the right thing to do uh, from an odds based perspective because I mean, when you go from 65, potentially swings up to 68 and 69, I mean, that is significant profit that most people would just ignore because they're too scared to do this. But we're already planning. We know this. We're refining these things. We just have to get more athletic. That's the idea. Mentally athletic, because if you're mentally athletic, then just nothing phases you and you know it. What's helping me is like I might not be as able to control the cortisol and get in on every single one of these, but I might give you guys like, hey, like this is a long, even though I'm just short, I'm holding for another breakdown, but technically short here for a reversal, hold the 50%, then go all in and then all out. Or I'm sorry, maybe it was this whatever day it was, this day, all in, all out. Yeah, from 65, 566, it's 1%. And yeah, so it's worth it. Like the swings are nice. 1 to 2% to a VWAP on a day when all the huddlers are just going to lose money and you get in with low risk. Even if you don't like going short, you can do that. Now, I'm not saying like if it's a pure downtrend day, you definitely don't want to fade against the trend, but this was not a pure downtrend day. It was a day that moved too far too fast, and by the time my session started, they were going to cover, where it was just going to basically be a whole day that went up and then sideways, and overall the Bears won. But from if you only traded my session, the Bulls actually gained control of the RTH. So let's see if I got enough in today for everybody. I think so. Well, that's basically my analysis in terms of some of the info I wanted to share. We did higher time frame and lower time frame, and they kind of top down on each other, so you can see how they're related. But so yeah, hope everyone has a good Easter out there who might be listening to this, and we will see you on the next one. Unless there's any questions, but I think if there's not, I don't think you said you had and you couldn't participate. That's cool, totally awesome. We'll just end on a high note. Everyone have a happy Easter this weekend. Good Friday. Take care, guys. Bye bye.